Stocks I'm Buying April 2019 edition. Welcome in, guys, to my favorite series I do on this channel each and every month. Welcome to the Financial Education channel. I am Jeremy. Usually we call this series 3 stocks I'm buying, but this month I'm planning on probably only buying 2 stocks, and I want to share those 2 stocks with you guys here today. I want to go in depth on them. Now, this was almost going to be 3 stocks I'm buying, but unfortunately one stock that I started buying last month, which was the only stock featured last month, ELF stock, that one just went crazy since that video went out. Like, that one's up 20+% since that video was released, meaning basically now it's at a place where I'm just holding that stock and I'm no longer interested. So we only have 2 stocks here today, guys, but 2019 has been amazing, and I will share some discounts with you guys. First is on my Becoming Master of the Stock Market course. That is going to be 70% off today for everybody that sees this video. I'm going to pin that as a comment down there. And my options course, I'm also going to do that 70% off for you guys here today. I know a lot of you guys want to learn about options and different option strategies, so that'll be 70% off as well. I will pin both those in the comments, guys. And let's get into this. Alrighty, guys, stock number 1 that I'm planning on buying in April 2019. This is a little more obscure stock, not maybe as obscure as ELF was, but still not a super popular stock. And this company is called the National Beverage Corporation, all right? Ticker symbol FIZZ, F-I-Z-Z. As always, do your own research. Don't just buy stocks because I'm buying. I shouldn't even have to say that, but if you're watching this and you're new to this channel, do your own research, okay? But I really love this company for many different reasons, and this is why I plan on starting to buy this stock, okay? One is, it's a $57 stock right now, that's about a $2.7 billion market cap. This is not a big corporation, okay? When you think about some of the really big giants out there, you're thinking about Coca-Cola, you're thinking about Pepsi, and some of those companies have hundreds of billions of dollars in market cap. Even a smaller company like a Monster Beverage Corporation, right? Even that company has anywhere between a 35 billion and 40 billion. So even a Monster, which is like a smaller company, still has a market cap 10 times, well over 10 times, if not 15 times the size of National Beverage Company, meaning that this is the company in a category that could grow to be a much, much bigger company over the next 5 to 10 years, all right? They own the LaCroix brand. I don't know if you pronounce it LaCroix or LaCroix. I call it LaCroix, but that is a super popular brand that is growing very fast. That's their main business. And then they also own the Faygo brand as well, which is good, but honestly, the majority of their business they get from that LaCroix brand. And basically, those drinks have no sweeteners, they have no artificial preservatives and all those type of things, okay? No sugar. They're basically like a sparkling water, but flavored in a sense. And that's really the movement out there, I find, from a lot of folks, especially a lot of people that are trying to have healthier drinks, but don't just want to drink water all day long or something like that. They might want something that's got some flavor to it, but it doesn't have any sweeteners, it doesn't have any sugar or anything like that. So that's where this brand comes in, and that's the brand that is expanding very fast, and really the brand that has transformed the business over the past several years, okay? They have a repetitive business model. I love repetitive business models. Business models I've learned that I don't like are business models where you sell one time, somebody something one time, and that's it, okay? I love a repetitive business model, which is what the drink business is at the end of the day. People that, if you start drinking LaCroix, right, and you drink that every single week, as soon as your LaCroix runs out, you're going to go down to the store and buy some new ones, right? No different than if somebody drinks Coca-Cola every week and their Coca-Cola runs out, they go down to the food store and they buy another case of Coca-Cola. I love a repetitive business model, and that makes this business model pretty much recession-proof, okay? This is pretty much a recession-proof business model because it's a drink business. Even during times of recession, people don't, stop drinking stuff, right? It's a need-based thing, and generally you're talking about something that's very cheap overall, especially if you're talking about budgets. So usually drinks aren't something that people cut back on in hard times or something like that, okay? So a business model that is about as close to recession-proof as you can possibly find in the stock market. I love that about this business, okay? Also, very profitable company. They're profitable each and every quarter, and their profitability has increased dramatically over the last several years. I love that about the business, okay? No debt. You guys know I'm a freak for a balance sheet with no debt, and guess what? This company has no debt on their balance sheet. They have approaching $300 million just sitting around in cash. and no debt. I love that. By the way, they do pay, I didn't even include that up here, but they do pay usually one-time special dividends each and every year. That's just something if you're a dividend investor, okay? Forward P on this company of 17, which is a little bit above where the market's at right now, but for the category, you have to kind of judge it against the other peers in the category, the Coca-Colas, the Pepsis, or the Monsters, and all those companies generally trade at a forward Ps in the 20s or 30s. So at a 17, that is actually really, really low for this category overall, okay? And lastly, it is in a growing category. So if you just kind of think about, where drinks have gone, you've noticed, especially in developed markets, the United States and Europe, you notice soda sales have, stagnated or basically declined for the past decade or so. They were kind of, on the upswing, and now those type of drinks, the Coca-Cola products, a lot of the Pepsi products, I'm talking about strictly the soda products, a lot of those are in decline, and the only place they can get growth is maybe emerging markets. But if you're looking at categories like sparkling water, sparkling beverages, things like that don't have any sugars in them and whatnot, that's a massive growing category. So when I just kind of look at it, I say this is a company in a very good space. I used to be invested in Monster many years ago, and in Monster Beverage Corporation, for instance, that was the one I was able to hop on the train because they were in a huge growing category of the energy drink space at that time, and it was kind of like them and Red Bull, and they were kind of the guys on the come up and whatnot, and that stock did amazing. And anybody that was involved with Monster, basically from like 2002, which was way before I started investing, but all the way basically until like 2015, you probably made a ridiculous amount of money over that time. So I really like this company a lot. I hope it goes even lower. I would love to see it in the low 50s. I would love to see it in the low 40s. If it goes below 50, then I'm gonna start buying very heavy. But even at 57 here, I think it's a good deal for the long term. It's the type of company I really like, guys. That's stock number one. Let's get into stock number two. Alrighty, guys, stock number two that I'm planning on buying in April 2019. What is it? This stock has been hammered in. Oh, it is Tesla. All right, ticker symbol TSLA. Tesla, if you do not know, they make electric vehicles. They also make solar products, battery products, things like that. All right. Tesla, I'm really excited about. This stock has been absolutely hammered the past month. And right now, the shares are trading somewhere around $266 right now, okay? This company has around a $45 billion market cap on it. And you got to ask yourself, for $45 billion, what are you getting with this company for $45 billion? Well, you're getting the number one player in electric vehicles by a mile. There is Tesla and there is everybody else in market share. And it is not even close. If you look at their market share in North America or even Europe, like there's no one even doing remotely close to the type of numbers in electric vehicles that Tesla is doing. And guess where all cars in the future are going to be electric vehicles at the end of the day. And who's the number one player there by a mile? It is Tesla. So meaning, let's say somehow Tesla actually loses their number one spot in market share and they fall to number two, they would still have a massive market share in the end. So Tesla is number one by a mile. They say there's competition coming. I've heard that for years and years. There is competition coming, and there's some competition that's come, but there's been no one to even remotely put up a threat to Tesla as of right now in terms of market share for electric vehicles. Maybe that happens in the future, but we haven't seen it yet, okay? That's the bottom line. Model Y orders, there's a big backlog starting on that now, which that is good when we don't know how big the backlog is. I'm sure it will be pretty big, but we don't know if it's going to be like a few $100 million or we don't know if it's going to be a few $1 billion of backlog. But needless to say, there's going to be a good backlog for Model Ys. That money is basically going to be put on the balance sheet, just sitting around there. That is going to be good from a balance sheet perspective for like, institutional investors looking into the company. That makes them sleep better at night, okay? Tesla's now delivering the Model 3 to China and Europe. That is obviously a good thing. Before, basically all of 2018, Model 3s were only getting delivered to United States of America, okay? And if you didn't live in the USA, you couldn't get a Model 3. Now it's been opened up to China and Europe, and we're going to get to see a lot of demand. It's possible that the European demand, especially on a long-term basis, will actually outpace the United States demand for Teslas, especially for the cars out there, because a lot of people in the United States either drive trucks or SUVs. In Europe, a lot of people drive cars there, okay? And a lot of people people in Europe especially love to have electric cars, are very interested in electric cars and excited about it, probably even more so than the United States. So it's very possible that both those markets could actually dwarf the United States long term, which is crazy, okay? Probably won't happen overnight, but long term it probably can. The Shanghai Gigafactory is under construction right now, and there's some talk that it could open up in basically the back half of 2019 toward like November, December. I don't know about that. I would say, you know, basically early 2020 you should expect the Shanghai Gigafactory to be up and running. That's going to help Tesla in a massive way from a cost advantage perspective. Right now they're at a big cost disadvantage for selling to China because basically they make them out, you know, the Model 3s in Fremont, California. Then they got to ship them all the way to China. There's some tariffs and different things on different products they get. When they can just, you know, make those cars, those Model 3s in Shanghai, the Shanghai Gigafactory, it's going to help them out dramatically and be a much more cost effective. So, you know, obviously a lot more people can afford those Model 3s. That is big. Revenues, the best way I could put it is revenues are going insane. Literally, like revenues have been increasing at 100% plus clip year over year in the last few quarters. Like that is mind-blowing, guys. The amount of companies that are at the scale of Tesla is that grow revenues year over year on 100%, like it just doesn't happen, okay? Even at 50+%, it just doesn't happen at this type of scale, guys. Usually when companies get to this type of scale, maybe they can increase revenues at a 20 or 30% clip, but when you start talking 100%, that is ridiculous, okay? That is phenomenal. The big debt payment is done. That had been talked about. I had been hearing about that for almost like 2 years. This big debt payment that was due, $920 million. They got that paid. It's over. It's in the past, and we can move on. I think that's just a good thing from an investor mentality standpoint, okay? Services, this is something not many people look at, okay? Not many people are even paying attention to this, and I'm telling you, this is going to be a big thing, what drives the stock over the long term. And basically, right now, the services and the supercharger network is basically a headwind to Tesla's business model, and it's been, you know, for years, basically. But what you're going to have happen in about a year to a year and a half, the services and the supercharger network is going to go from it's a headwind, as in it's hurting the company from a profitability standpoint, to an actual tailwind where it's going to be pushing profitability in the future. And the reason being is almost all Teslas on the road currently are under warranty, and there's some that aren't under warranty anymore. But basically you need, if you're going to make a lot of money in services in the auto business, you need a lot of cars that are not under warranty anymore, because essentially when warranties run up, right, people have to start buying those products when something breaks in their car. They have to start doing that out of pocket rather than Tesla covering those charges. Over, you know, basically now and going over the next couple years, you're going to have a massive amount of Model S's and Model X's start to run out of warranty. And then toward the back half of 2020 and maybe moving into 2021, then you maybe even get a few Model 3 start to run out of warranty. And so services and the supercharger network is something that long term will help, you know, probably make Tesla billions of dollars per year in profit. But right now it is hurting Tesla's business model in a dramatic way. They just don't have the type of cars on the road. Okay, remember, a lot of automakers make more money from services than actually selling the cars the first time. Something to keep in mind there, okay? Everyone also forgets about the solar business, okay? No one's paying attention to services and supercharger and how that's going to help the business long term and how much it hurts the business now. Also, no one is paying attention to the solar business, and I understand because Tesla's put that on the back burner because the focus has all been on Model 3 and getting that up and running and whatnot. But the solar business still has massive potential for the company over the long term. They have a phenomenal product. They just need to get costs down on that. They got to get the marketing right. And, you know, in terms of having a solar roof, that energy is collected. It goes right into your garage. It is stored in your garage in a big, you know, battery pack, essentially. You can charge your Tesla with that. It's almost like, you know, a perfect cycle of, you know, being off the grid, I guess you could say. So I think that still has big potential. It's just something that's not seen right now. And you're getting this company, the way I look at it, you're also getting this company as the same valuation that it had 2+ years ago. And 2+ years ago, there was a lot more guesswork that had to go into all this. There was like, well, I hope they can do big numbers someday. If you were investing in this company, you know, 2+ years ago, well, they can probably do some big numbers. We don't know. You know, now you've seen the Model 3 numbers. You've seen the 100% plus revenue clips, okay? You've seen now Model Y, you know, come out and basically, you know, be shown off and whatnot. And that's going to go into production in 2020. So you've seen all this, the Shanghai Gigafactory, this debt payment was done. So you're getting to see so much more, but yeah, we're 2+ years down the road, and you still haven't seen anybody threaten Tesla yet in any way in electric vehicles. It just hasn't happened. So in my personal opinion, you're getting this company for a massively better deal than 2+ years ago when you were paying basically the same price per share, because there's just so much more known about the company now. There's just so much more understood. They've delivered on so much more since then. They've gone through the trials and tribulations and all sorts of things. And, back then, there was people saying, oh, they're going to get knocked off in electric vehicles. It's 2+ years later. There still hasn't been any real threat to Tesla as of yet. And so I just look at Tesla and I'm like, you're getting it for a lot better deal than back, 2+ years ago, even if you're paying the same price per share, just because you know a lot more about the business now and they've been through a lot more, guys. So anyways, hope you enjoyed this. This was 2 stocks I'm buying, April 2019 edition. Let me know what you think about either one of these stocks in that comment section. Don't forget on the great deals, guys. Those are going to be the pinned comment down there, all right? Thank you for watching and have a great day.